A lot is happening right now in the Forex industry. People are asking questions, and these questions needs to be answered. Trust me, if you want to move forward in this Forex game, it is important we ask this question and then try to answer them in the best way we can. But then there's been talks everywhere. You see, Jerome Powell just announced the end of quantitative tightening, and people are thinking, what's going to happen to the dollar? What's going to happen to the US economy? How can I trade? How do I do this? How do I do that? And most importantly, they're asking this question: would there be an interest rate cut on the 10th of December when the Fed will be having their meeting, with Jerome Powell? And this is something that has been going on for a while, these questions, right? But in today's video, we try to answer some of these questions and try to position ourselves with what's going to be happening in the nearest future, December 10, and how we can start taking trades following this information. My name is FX, and it's just the same thing we do every other day of the week. Try to talk about Forex and how we can start putting the right foot in place and how we can start making profit. So let's go. Now, before we talk about quantitative tightening and what it means with how Jerome Powell talked about it, it's important we understand what it really means. Because I believe when you understand this, you can start thinking in the direction where you probably right what would happen in the coming weeks. Right, so let's go. Quantitative tightening. Now, quantitative tightening simply means a way where the government tries to take out the excess inflow of cash in the economy. Right, now one of the reasons why they do this is to ensure that inflation doesn't go above a particular point. Now, we may see inflation to be something bad. At some point also it could be something cool, because inflation that is checked over time becomes good for the economy. Right, now let's move forward. How is quantitative tightening done? Right, how is it done? Now, quantitative tightening is done through these three ways. Number one, non-reinvestment. You see, non-investment is a way by which when the government gets in money from sales of bonds they made through banks, they stop reinvesting this money. Now, one thing this does is that it reduces the central bank's holding. Right, now take for instance, for when you kind of invest in a particular industry, you tend to make money, and at the same time you fund that industry. Right, now whenever there is this non-reinvestment done with the central bank, they don't reinvest the capital they get from the sales they made. They don't reinvest it, and one thing this does is that it kind of shrinks the flow of cash within the economy. And this is oftentimes done, just like we've said, to make sure that the inflation is at a particular level. Now, the next way they ensure that quantitative tightening is being kept is asset sales. You see, the Federal Reserve or the central bank, they sell assets, and these assets are in form of bonds, right? Whenever they sell this asset, they kind of bring in money into the Forex reserve, right? And when they do so, it limits the flow of cash. Take for instance, you've got a product, you sold that product out, you take in money. Now, the guy who bought that product from you take in the product you sold, and then you collect cash in return. So that is just how it is when you talk about asset sales with the central bank, right? The third way they ensure that quantitative tightening continues is increased interest rate. You see, when there is an increase in interest rate, this kind of discourages borrowing, and it makes people who would naturally or originally want to just go get cash for whatever spending they want to do to think twice and say, yo, the interest rates have been increased. I don't think I want to go get money if it is not important. And for this reason, borrowing kind of tends to reduce a great deal. Right, it reduces a great deal, right, so that the flow of money is kept within a minimum, right, and that is just all it takes to ensure that quantitative tightening keeps going on. So last week, Jerome Powell announced the removal of quantitative tightening, and let's put it to be this way. Take for instance water is flowing through a pipe, and there was this blockage that has been placed right in the pipe. Now this blockage impedes the flow of water, right? Now, what happens when this blockage is removed? Water keeps flowing. Right. So currently, I believe that since quantitative tightening has been removed, there's just gonna be a flow of money into the economy, and trust me, for now, I believe the economy will be doing well. US economy will be doing well. Dollar, it tends to skyrocket, it will be buying. And it's not until these other guys who borrow money for consumption start using it. Because stuff like this has happened in 2008, right? And we just hope it doesn't happen again in 2025. So right now, the next question is, what's going to happen on the 10th of December when the Fed's open meeting? Well, when I was talking about quantitative tightening, I said one of the ways the Feds ensure that quantitative tightening continues is by raising interest rates, or what we call interest rate hike, and this reduces or discourages borrowing. But imagine right now the quantitative tightening has been removed. What do you think would happen this coming week when the Feds meets when we're talking about the interest rate? Well, personally, I believe that the interest rate would be reduced probably by 25 basis points again, or even more, right? Because it is what it is, right? It is exactly what it is. Since quantitative tightening has been removed, best believe interest rate will be reduced come next week. It's next week on the 10th of December. So let's just keep our finger crossed. I hope it's been reduced, because all of this would also affect the market positively, and best believe dollar will be seen touring through the roof. Maybe not for long, but at least for this short while. Now, this is all we got for you guys in today's video. It's important we all stay sharp and then stay active to understand what is happening around the world, especially in the world of trading. My name remains FX, and as always, it's a joy having you guys around. See you guys in the next one. Peace.